Hey everyone, happy Thanksgiving if you're watching it on Thursday. Market's off, I'm doing homework. So yesterday or this week, I got intrigued by gold. GLD is an ETF, GDX is another one. This is the GDX. Also silver to a degree. They are falling into a buyable dip, tradable dip, I should say, tradable dip. Different than like an investment buy. This is trading the price action. And we also have to pay attention to the dollar. And the whole picture wraps up. So far, nothing has happened that is too weird. And I'll show you my notes. This is the GDX. I haven't touched this chart in a long time. You can tell by the comments. However, right here, I had this red line and this white upside potential. I said it is resistance at some point on the way up, and breakout line also to breakout line to this point, but I said 35 will be tough. It failed at 35.03, so nothing is surprising is my point, but they're making progress. Higher lows, they're fighting this resistance area, and this was another area. This is normal price action. Now, what you want ideally is for it to find footing, keep the progress going, come back, slog through the stuff area one more time, and then I'll put the alert. The trigger is going out of here. So if you've known me, I sometimes say buy the dip or chase buy the rip. Basically, you either buy the dip to try to swing it to the breakout point and above, or wait for that confirmation, and once it breaks out, take it out. In this case, I don't want to wait if I'm interested in trading that, because if I wait to here, then I have immediately another major fail, and then I will not be brave. I think I would be braver buying the dip and leaving some and stopping out if it doesn't work out. So somebody who's interested in going long, quote, gold or silver, this would make a tradable event here area. So I'll add the dollar conversation. Now, the progress happened during a strengthening dollar. I recently closed my long dollar trade, and I've been in it for months and months, and it's been very frustrating. And then finally it paid out this week. It paid out big time this week, but it took forever. And I'll tell you why I got out. My target was 26 on the UUP for gold, 26.12 or something. It came to 26 flat. And I was like, this thing is a slug. I'm just going to get out. Even if I miss out on some upside, I'll re-engage. So now, if I'm right about the dollar, then this is one less downside pressure on the metals. So the opportunity would be to swing this up. And I'm not going to say straight up. It can still fall to here. So, patience is going to be important. It's going to come here, it's going to fail, it's going to come here, probably think about it, and then try to finish the job. So I'm not creating a new path. It's just this target did not unfold immediately. They came back one more time. If they keep the progress, if they just keep the progress, and I don't need it to be like a straight line. If they keep the progress going, this visual representation of what the progress is. I'll put it in white just so it sticks out. Then this trade is alive. So how do I do this? I can buy shares, I can buy calls or call spreads, or I can sell puts, or I wouldn't sell puts, or put spreads, because this is an ETF, and this is an ETF of stocks, the miners. If you want the pure play on this thing, it's the GLD. And look, I've already written it up that way. Progress, let me take out the lines. The progress, the failure, although it did go better than the GDX, and maybe we come back to here. In this case, this for me would be an exit point. This does not look like a trigger, it more so looks like an exit point. So there are the opportunities in the GDX and the GLD. The SLV is a cousin to gold. It doesn't always go with gold, but they have the similar patterns right now. Same deal. I would want them. See, I haven't touched SLV in a while. This was part of the Reddit group for a little bit, so be careful with that. Progress, some sort of a base right here. I put an alert for me to wake up and to take a long and stop out immediately, because it's starting to look like Head and Shoulders. Yeah, not one yet, but looking forward. So let's say this bounce faces resistance, and then they come back here and they lose this. This will cause a dip down to about here. So I should put this alert, instead of here, I should move it to here, or put 2, 1 and 2. So this alert says, try a long and stop out fast. Why fast? The premiums in this guy are pretty meek. So I would have to take single options. I wouldn't do spreads, and I would buy them in the money, out in time. I wouldn't try to get cute and, okay, it's going to get to 22, 23. I would buy one up there. No, in the money. So the trades would be one of those 3. This will be probably the cheapest from the premiums, if I remember correctly. Once I do something, I will share it, but I'm sharing the homework so you can think about it. I would buy either calls for January in this thing. December could work if you're an active trader. January is a slightly slower trade. In the money or at the money. Like if price is 21.8, I would want to be at 21.5 if they have one, or 22 at the highest. And then stop out how? If this is lost, or if X% of my money is gone. So if I start seeing my premium disappear to the tune of 20%, I would get out and try again later. There's no, not every trade works out. This is a trade, not an investment. It's a tradable level, not an investment. I'm banking on the momentum staying with the bulls so they can tackle prior failures. Best represented in the GDX, or the SLV too, but the GDX is more familiar to a lot of people. Plus it's a bunch of companies. So they have support. Maybe they hold it and they continue on to tackle the prior failures. For me, if I get started here, I get out here in this area, or trim, lock, and leave some for the off chance that it takes off. So it's more of a, let's trade the dip and see if we can catch a swing. So I wouldn't hang on to it until somebody tells me to get out. I should determine the fact that, okay, if I get 30%, 20%, I should consider booking. These are uncommitted markets. So I shouldn't trust them to continue what they're doing. Look how choppy these things are. So up, down, up, down, up, down. And I promised you the dollar. So the dollar had been in a downward spiral for a long time. So this is the mess of COVID. And then it couldn't find footing, probably because of the trillions of dollars we poured into the economy. Then it stabilized, and now it's making a comeback. So the breakout really was here. The target of that breakout is somewhere here to here. So it could rise a little bit more. It could rise all the way up to here. I'll re-engage with better data. But this is a weekly chart, so it's misleading somewhat. This is a daily chart, and you can see that on a daily perspective, it is extended. So if it dips back to 25.50, 25.60, I will re-engage long as a trade. So maybe that dip would give the relief on the GDX to do this, because when the dollar spikes, everything priced in dollar has downside pressure immediately. So let's try to match it up. This was a bad day, November 22nd, 21st. So if we go to the dollar, big up day. So it makes sense. It's not a rule. Sometimes there are exceptions. Look at oil. Oil should drop also with rising dollar, but oil is manipulated, so it doesn't sometimes. There you go. The opportunity is the metals, precious metals, or semi-precious. So gold via the GLD, GDX, or SLV. Not all three. They're going to behave almost identically. So find out the one that you like. I've done the SLV very few times. with mixed results. I've done the GDX a few times with good results. I've done the GLD a lot of times with more good results than bad results. So the GLD is probably the most consistent. The cheapest way is probably the SLV. Somewhere in the middle is the GDX. However, keep in mind the GDX is a bunch of stocks. So if gold spikes because the markets are falling, GDX may move up with gold a little bit, but then it corrects. So then you have an extra dynamic about the companies.